1 opportunity. We keep talking about it. बहुत बात हो रही है China plus 1. Every time there's something we talk China plus 1. हमारे को ही सब कुछ मिल रहा है. Insofar as the API space is concerned, is this really a big opportunity? And can you possibly quantify this opportunity?
So interestingly, when you say China plus 1, the term itself, acknowledges that it is China. China is already there, and we are trying to find something in addition or as a help or substitute to what China is. So of course, it's very, very difficult to replace or come against China. If you just Google and see some of the numbers, the difference is of 10x. So very difficult. Your question was around quantification. Quantification is again has to be looked in the right perspective. So if you see the Indian APIs market would be close to around between $4 to $5 billion.
That's correct.
And China API market would be close to around my guess is around $40-45 billion. So it's a scale, as I said, it's a scale of 10x there. And so again, if you just think, why would someone who is already doing a business with China would want to move away? There could be few reasons. One, and keeping in mind that it is a B2B business, right? So the dynamics are very different from what we heard, during the earlier part of the day. One of the key reasons for moving away from China could be the IP considerations. We recently saw a lot of news going around DeepSeek and all those allegations there, right? A similar kind of fear or apprehension is there, even on the API or IP side, and that could be one key trigger of moving away from China. Now, this is definitely a great opportunity for India to capture there, and that's we are doing a lot. The Biosecure Act, when it came in, when it was announced, it's not yet done. But we did see a lot of movement, on the B2B side from China to India. Second reason for anyone to move could be cost. That their current partner is expensive and the other one is cheaper. It's again something to debate. India is yet not there to offer things at a rate or at a price which is cheaper than China. And third, again, a pretty critical one could be the supply chain risk. So what we saw during the COVID period, has scared a lot of nations across the globe, and everyone is thinking about kind of ensuring their production capabilities and becoming more, taking care of the risk there.
Right.
So that could be again, India comes up as a very good alternative to China. We will later on in the day have a session on the obesity market, where I guess everyone in the room here knows about the peptides, the semaglutide and tirzepatide and all.
Right.
So here again, if you see, I don't remember the numbers exactly, but for semaglutide there are like 47, 48 filers, of which 41 or 42 are from China. So anyone who's who's looking for an option would of course consider this supply chain risk, that because of some geopolitical issue, anything happens, they need to have an alternative, and India comes up as a pretty good alternative.
Fair enough. Prasanna ji, is this, if there is a China plus 1, impact, does it present itself as an M&A opportunity in the API space? A viable M&A opportunity?
It's a difficult question, because I think as Gunjan mentioned, right, I don't think China plus 1, what are the reasons for China plus 1? It's really dual sourcing, one. It's really not cost, because we are not going to be as cost competitive as China. And 40 billion, that's the amount of exports that China does. We export about 4 billion, right? So I think your earlier question on how to quantify it, I guess, even if a billion or two of that 40 billion comes to us, that's a growth opportunity. To your question on whether there are many opportunities, I don't think there can't be a China-India sort of M&A channel, so to speak, but we are increasingly seeing that there are a few European players who are cautiously looking at establishing base in India because they would want to have a manufacturing base in India, which is cost competitive with China, which allows them to meet their dual sourcing objective. So in our judgment, yes, there is some strategic interest there to get into India, and that could be through the inorganic route where they start looking at targets in India. That's clearly one opportunity. But I think the larger opportunity lies in acquiring capability. And one of the things that I believe Indian API manufacturers really have to up their game, moving up the value chain, and which is where I think a lot of M&A opportunities lie. Where if you cannot build those capabilities organically, you're going to build those inorganically. Right?
Okay.
So yes.
Are people you are aware of actively scouting for such inorganic deals of a reasonable scale already?
So Indian manufacturers, yes, would want to, bolster capabilities. And as I said, right, when I give you these examples, when I talked about these things, these are based on live examples.
Fair enough.
These are conversations which are happening, which we are aware of. I mean, maybe transactions are not closed in the last 12, 18 months, but there is enough and more interest that we are seeing from select people wanting to set up base in India, wanting to acquire companies in India, and more importantly, Indian companies also wanting to acquire capabilities outside.
Fair enough. Gunjanji, in terms of government policy, what are the what can the government do? They have instituted a PLI scheme. Are such policy measures helping? Has the PLI scheme helped any bit? Or could you recommend from the industry's perspective, what is it that you'd like the government to do, if anything? Policy and regulations.
Sure. See, I think we woke up pretty late.
Yes,
so
as always.
That's a key concern here. Just to again share some numbers, and most of you might have already come across this fact that I think in 1991 our dependency on China was just around 7 or 9%, something like that. And come 2021, that's moved up to around 75%. So definitely China was doing something in the interim where we were lagging. And I mean, there are a lot of, again, data on that, how China very strategically, each part of their, from 9th to 14th, the 5-year plan, the Chinese 5-year plan, which is there currently 14, I guess, is going on. So in each plan, they had what sector of pharma, what key capabilities of pharma they have to focus on. So, I mean, right from capacity building to quality, to taking care of patients, so innovation, all those things have come through each and every plan. The PLI scheme is a great step. The government has woken up and as I said, a lot of good measures are being taken. PLI 1 came in, PLI 2 came in, and these are actually creating a lot of impact. The way PLI 1 was done was like the government had identified which all APIs have a significant dependency on China, and they chose where nearly 100% dependency was there, and they came up with an offering that yes, whosoever is willing to invest, they will be subsidizing or rewarding them as a percentage on the value creation that's they are doing, and that amount was like 7,000 odd crores or so, something like that in PLI 1. PLI 2 was 15,000 odd crores. Now, in the larger scheme of things, we heard some of the numbers about the overall pharma requirements. These are good numbers, but really too small. So
yes.
To really make an impact, yes, they are. And we will start seeing some of the benefits coming in there. But again, too small. And to your latter part around what would government do or what we should be doing to, from a policy standpoint, these investments have to continue, have to come up in a larger scale. Where we miss out on China is I think now it's become two things where we are missing out. One is innovation. China has really caught up on innovation, and we are actually, nowhere in the vicinity in terms of innovation. We are just playing the typical generic Me Too kind of a game there. And it's become very critical at this stage that we start focusing on innovation. I'm really glad of hearing some of the startups, the kind of work they are doing.
Right.
That's what is needed now. And lastly, so the subsidies have to continue, and the government has to start incentivizing the R&D, investments as well. So there should be some incentive for the private players to put in more money on the R&D. Otherwise, they will typically look at while the larger objectives are there, but eventually financial objectives also are important. So wherever the returns are better, people will move that side, and that's the objective of giving incentives.
Fair.
So some R&D incentives in terms of tax breaks or something, and infrastructural incentives. So that would.
I'd like the both of you to answer this next question, if you will, please. We faced a critical situation during COVID, and we are all aware of what the situation was, so I'm not going to recount it here. What is it that we can actually do to prevent something like that? Mr. Bora, if you can start off, and then Gunjanji, if you can take over.
So, clearly, I think the PLI scheme's intention is really an outcome of what happened in COVID in a way, where we realized that if we keep being dependent on China and there's a disruption in the supply chain, then how do we get essential drugs, right? That's what the PLI scheme is focused on. It's really not focused on making us more competitive with China. It's focused on making sure that there is supply surety, and that's why if you look at the PLI scheme also, it's focused on drugs which are very essential drugs.
Right.
So I think that step is in the right direction. I think we need to take that one step ahead, because that PLI scheme is going to give us rewards only in the next 2, 3, 4 years. But I would presume that we need to really ramp up volumes which are commensurate to China as far as the essential drugs are concerned, simply because the PLI scheme is not going to ensure supplies to that level even at places what capex plans people are talking about. So if we are really talking about catering to such a large population that we have, this scheme has to go up in my judgment at least by 2, 3, 4x.
Okay.
That's the level of capacity that we need at least for the essential drugs. So that's one lesson in COVID. The other lesson, according to me, again, we harp upon innovation. I think clearly COVID has given one opportunity where a lot of innovators have realized that they cannot be dependent on one country on where they are sourcing services. Right? And hence I see opportunity, while we're talking about APIs, I see opportunity on the CDMO side, where we're lagging in capability, but there's a huge opportunity because we could be a very serious alternate source where people start looking at us as partners.
How do the valuations essentially look currently?
I mean, a lot of private equity guys in the room, they would say expensive. As bankers, I'll say reasonable or robust. Look, I think they are rich, but there's a reason why they are rich. They are rich because of the potential, and there's a massive scale-up which can happen for these CDMO players over a period of time. And you also have to understand the potential, right? We are possibly about 5% of the global CDMO market, right? So the headroom for growth is phenomenal. And if we do get our game right, and honestly we are lagging behind as compared to Korea and a few other countries,
right,
the potential is immense, and that is what translates into the rich, expensive multiples.
Okay. China is one thing, but Europe is another thing. Gunjanji, there has been a focus in the continent of Europe on ESG. What sort of an impact has it had on the API segment, or has that had any impact, or is that likely to have any impact going forward?
Yeah, I think again, this is one area where the world is now waking up to the need to focus on environment. Europe has taken the lead here, and they have come up with guidelines or expectations which they expect their suppliers to fulfill. Some of the tenders, even in the UK now, they demand a certain degree of audit on the ESG parameters there. So it is it's again a step in the right direction, and it will soon be an entry barrier, correct entry barrier for a lot of players. It's high time that we all, as stakeholders in the larger ecosystem of pharma, start focusing on the ESG metrics. So, to answer to your question, yes, Europe, we do see an impact from the European side. our customers, partners, they are asking for, what level of accreditations are there. They're coming and auditing our facilities, those kind of things. And soon it's going to be, more stringent. The expectations are going to be higher. I represent Dr. Reddy's here. We've been really the kind of pioneers on the API side on taking care of the ESG goals. Really proud around that. But the value out of that kind of an investment, which started like a decade and a half back, we are already starting to see the tangible outcomes of those kind of investments we've put in the past, especially on the.
Are there audits as rigorous, if I may ask, as the US base?
Yeah, so US incidentally on the ESG front they are not asking for it.
Okay.
It's typically the European companies and customers and the EU Council that is more aggressive on the environment aspect. So they are not there, but I guess, yes, they are also conscious around these aspects. And I think it's, again, personally I would say it's a thing in the right direction. We are taking away a lot of things from the environment, and it's our responsibility to give it back. So every company which is operating, and unfortunately in the Indian balance we have a lot of, this API industry is very fragmented, unstructured, and that's where we do a lot of exploitation of the environment and we don't give it back there. So, yeah.
Okay. I'll throw the house open to questions, ladies and gentlemen. We have 10 minutes or thereabouts. As always, the rules remain the same. Please wait for the mic to come to you, raise your hand, wait for the mic to come to you, identify yourself, ask a specific question, and let us know who the question is directed to. Anyone in the house? Yes, I see an hand there.
Thank you for your time today as well. I'm Sandra. I'm a lawyer with Shardul Amarshik Mangalas, based out of Mumbai. I actually have a two-tier question for the both of you. One is that you said that there were interest from the European investors. So do you think that an increase in the FDI limit from 74 right now to 100% would help investors think that India is more investor friendly? This is coming because insurance, I believe, is pushing for 100% permissible in FDI sector, and it's being discussed in the upcoming budget. So do you think a change like that for APIs in the pharma sector is a welcoming move? And the second part of my question is that the 2020 restriction that neighboring countries can't invest in India, including China, without the government.
Press note 3 of 2020.
Yes, the PN3 of 2020. Did that really impact the business in India? Like, is the resolution, the loss of such investors from these countries, did that take a hit in investment in India?
Prasanna, would you like to go first?
I'll answer both. Both are not a constraint. In our experience, at least, PN3 has never been a constraint because money comes in from all parts of the world. That's one. Second, to your question, if 74 moves to 100%, will it help? Yes, obviously it will help. But is that a consideration while looking at moving manufacturing base to India, setting up base in India, or acquiring assets in India? No. I think acquirers work with regulations and are okay with 74%. So none, in my judgment, are constraints.
I agree with what Prasanna said. Most of the API or otherwise, on the pharma side, if you look at the companies, the debt levels are, they are debt-free companies there. So there is not actually so much need for cash, and whatever the current system or the arrangements are, they are kind of sufficing the need.
Thank you.
Next question. Anyone?
My name is Rajiv Kalabi, and I'm a partner at Cactus Partners. I know this question might be very, very wide, but what has changed in the API industry? Has India become a lot more competitive? And if it has, where has it become competitive? Where is it that maybe China still is ahead of India? It would be helpful to get a quick.
Who's your question for?
For the gentleman from Dr. Reddy's.
Thanks. So it's not like a cusp of time to say. India, because of the inherent talent, the initial days, when Dr. Reddy's started, or I'm saying like two and a half decades back. Since then, we started taking the steps in the, which helped position India, on the global pharmaceutical space. the USPs of India, I would say number one would be talent. Number two is ability to speak English relatively, right? Cheaper source of manpower to say, right? So science and technology, English, and the success which we tasted much earlier in the US market. So Indians were the first ones to enter that space, and mid-90s, the companies like Dr. Reddy started tasting success, and a lot of other companies followed them. US being the most rewarding market, people did understood it very quickly that this is a game where they can play for several long years. So what exactly has changed very recently is the only thing of where we have realized that we have too much dependency on China for our early stages of products and some of the APIs, and we actually are at a risk currently as we speak, and COVID was a great mirror to that phase. That if something happens and China pulls the plug, we have a huge population, domestic population that we have to take care, and we are yet not there. So that's why the government has started taking all these initiatives. Industry has also started contributing significantly to it, and we will start seeing a lot of benefits coming in the next 3-4 odd years. We continue to be strong, but the scale at which China plays, it's enormous. It's simply enormous, and the government support there, the government supports on utility, on credit, on the land and the infrastructure, all those things. Some of these things are really difficult even for government to manage within the country. So we are moving slow, but in the right direction. But yes, we will never be, as long as I am alive, possibly, we will not be able to be there.
But tell me something, it's again to both of you, if you may want to take it. China will itself be impacted by Trump's tariffs if they happen. What will be the impact, if at all, this specifically is to the future, on the API and pharma sector in general and India? What will there be an impact if Trump imposes tariffs on China?
So, not much.
Not much.
Because their captive domestic, the captive consumption of the domestic market itself is very big. More than 2/3 of the total API requirement of China is consumed for their captive population, and that's how actually China has progressed significantly in majority of the other industries and sectors.
Fair.
So not so much, but yes, what US has started doing is they are scrutinizing all the companies who are supplying to US and checking on their supply chain dependency on China. So they are already doing all the maths to really understand what kind of a risk they might be exposing themselves to should there be a need. And that's also a great opportunity, as to Prasanna's earlier point, that for India and US to collaborate better. If India can emerge as a very strong alternative with a very capable and integrated supply chain, so that even not just India's domestic population, at the same time India can support the US population as well.
Fair enough. Any more questions? Yeah, we have a hand here. Yeah. Louder, please, if you will.
Reemphasizing this point which you were saying about we can't actually compete with China of the cost. I mean, I'm citing example of Benji, which was a big project that Deutsche took, and we are still seeing low utilizations on that plant. Given it's a life science essential medicine, unless we bring down the cost lower than the Chinese players, I think that substitution will not happen. So, I mean, is there a flaw in this argument that creating significant capacities will eventually result in cost being so low that Indian customers will shift to Indian API players for these basic medicines? Or, I mean, we should just think as these are these idle capacities used for a very rare situation like COVID to create a China plus one argument. And on this line again, I mean, from productivity point of view, if there has to be any regulation that government needs to take, can there be like an anti-dumping duty stance that government can take on certain license APIs? Can that be done?
Okay, Prasanna, would you like to take forward?
Yeah, so I think your question on anti-dumping duty is very relevant, and I think some perspective. China doesn't supply to India; it supplies to the world, and the volatility in prices, specifically in certain intermediates and APIs, is so high that the raw material prices go up by 3x, 4x, and when that happens, and the volatility exists in China for various products, when that happens, and the prices suddenly crash, for example, China starts exporting a lot to various countries, and there's a lot of dumping that happens, which does have an impact on cost competitiveness for domestic players. So to your question, yes, there has to be a check that the government has to do as far as dumping is concerned, not just Indian government, but I guess globally that's a concern. What the concern really is the volatility in prices and what happens when the prices suddenly crash. To your question, I don't think again you need to look at what Aurobindo being cited as an example or setting up large scale capacity in India as a case of becoming more competitive with China, but securing our own supplies if something goes wrong in China. So I think it's more about ensuring that we have enough and more local captive production to meet our own needs, even if it is at a premium, because that is supply assurance versus saying that if I set up capacities which are of a certain scale, will I become more competitive with China? The fact of the matter is that we are not going to, they're far ahead and they have cost advantages. There isn't much that we can do at this point of time to get to those cost advantages. So I think it's more supply security which is more important in our judgment.
Gunjan, would you like to add?
No, I agree with what Prasanna just said. See, it is needed for sure that we build up this kind of a supply security, and how can the government incentivize the industry, because industry operates for profit, and as you also just said that the cost differences will remain. Can it not be beaten? Yes, it's not like something which is just not possible. But again, we will have to be pragmatic into what extent we just want to go after one single mission there. So I think that's the approach that government is taking. Another very important factor here is that the supply chains are very interconnected now. So again, alluding to what Prasanna said, that something happens in China is going to impact the world over there. And for us, another aspects of supply chain dependence is that if we put too high an entry barrier, right? So India is the pharmacy to the world also, not just what we the term pharmacy to the world is given to the country. Higher import duty will also make us less competitive for exports, globally. So it has to be done in a very smart way in which you are trying to take care of the domestic requirements by subsidizing or helping out the companies, or if suppose there is a tender, they can have something that it has to be part. Only the companies who are 100% production based out of India can participate, and they can set up their prices, stuff like that, right? So that's one way of protecting the domestic supply chain and the requirements. At the same time, you have to make the industry competitive also, because the larger market, which will bring us more GDP or the revenues and all those export dollars, lies outside of India. So we have to play both these sides, right? And it has to be more practical approach there. Take care of yourself, that's typically, and then after that, whosoever is the cheaper, go with it, as long as we are meeting the quality requirements and all.